Hi, everybody, and welcome back. This is Jeff Barton for the Mortgage Minute. Haven't been around in a while. Very busy towards the end of the year. Let's get right to it. Mortgage interest rates on the 30-year fixed rate are about 3.22. The 15 years at 2.55. That's a pretty good rate. 2.80 for FHA, 3.14 for jumbo, which really hasn't moved that much in the last 6 months, and 3.20 for the 5/1 ARM. The 5/1 ARM product and the 30-year fixed are very similar in rates. I always find it fascinating when a more, risky product is priced very similarly to, as most of you know, the most secure property out there, the most secure property mortgage out there is the conventional, which today is at 3.22. And as I said, the 5/1 ARM is at 3.20. It's kind of interesting. The 10-year yield is at 1.456. That 10-year yield has been really fluctuating very little. It goes up several basis points or down several basis points on a daily, but for the most part, it's been right here for about 2 or 3 months as well. A couple of the headlines in the news: forbearance below 1 million, about less than 1.7% of all mortgages. That's big. We had a high side, obviously everybody knows, of 4 and 5 million, 8, 9%. So that's a good thing, although I don't know what's happening with those forbearance properties. Many people want to see them hit the market because they think there's an opportunity. Usually what will happen is that the servicers or the original lender will work out some kind of payment plan, tack it on the end, add years in order to keep the people in the property as long as that they can make some payments. Mortgage rates are still low enough to be able to do that, and the equity in all properties is really going up. To that end, housing equity in 2021 went up $9 trillion. Think about that for a second. $9 trillion. It's astounding, really. 20% gains in some cities. We're looking at a slower growth rate next year, but still up about 4 and 5%. The rents are rising. Yes, they are. And anybody who is renting will know that. One of the benefits they're trying to pass a law or get something that both the credit reporting agencies as well as the ability to repay rule recognize rents as a stable way by which you can prove not only your ability to pay, but also affecting positively the credit scores. The home flipping business, which is still booming, albeit to a lesser extent than it was a couple of years ago, but the margins are down, and we see that nationally. Locally, in markets that the company I work for, Malibu Funding, is in, like Las Vegas, we're seeing there still are many fixers to be able to be had, but they're costing more money, and they cost more money to fix up, and the spread with which you're going to make a yield on is narrower. So one thing to keep in mind. The issuance of mortgage-backed securities has traditionally been the preview or purview of Fannie Mae and Freddie Mac. Well, the private label or the residential mortgage-backed securities market, which has really sprung to life in the last 2 or 3 years. Since 2008, there really hasn't been one. This year, 115 billion will be issued in issuance, it says, and that's doubled from 2020, and that's a good sign. We want to see the private market get back into the mortgage-backed security section. Obviously, in the non-QM market, they're doing that, and I think where a lot of this is coming from is there. We'll probably see next year a growth in non-QM, but a shrinking of the mortgage refi business, 10 to 25%, which will hurt a lot of lenders. And in so doing, a lot of lenders are going to be laying off people. So as a result of that, let's see, I've got Better.com, Interfirst Mortgage, Freedom Mortgage, all announcing layoffs. Better.com was the guy that was the CEO and who started it, came out and fired everybody on a Zillow call. He got a lot of flack. Obviously, you can't be doing that, and he's taking a leave of absence. But the trend of larger companies that don't pay commission but pay hourly wage of leaving or letting go of a lot of LOs, yeah, that's happening, and it's going to happen. So therefore, there will be talent on the market looking for work, and I probably see this happening a lot more next year than has been occurring in the last 2 years, even during COVID. Love letters bill in Oregon. Okay, a love letter is if you have a buyer and you're a real estate agent, you get the buyer to write a letter to the seller to be able to, enhance their particular offer, especially in a very competitive market. My own particular viewpoint is that it's okay and that it's not discriminatory, but the powers that be in Oregon see that it is. They're going to outlaw the practice. I think a lot of states will follow Oregon, especially in California and New York and some of the other more liberal states. The conservative states will probably see it quite differently. That's about it on the mortgage front today. I'm Jeff Barton, your voice in the mortgage industry for the Mortgage Minute. Thanks very much, and we'll see you next time.